do you probably see this as a sustainable fiscal strategy?
Yeah, definitely that strategy works in a way because currently looking at how the G2G is structured, there's an extended period of payment from the open tender from 30 days to 180 days. So what this means is that when the fuel is sold, the buyers in the market actually pay using the Kenyan shillings. And this is for a period of up to 6 months when the payment will be done. So in a way, this definitely cushions the demand and the rush, maybe or even the speculative attack on the dollars. So in a way, the strategy works, and that is why initially I had said when we started this G2G, the initial intention was to cushion the fluctuations in the dollars, so that as the payment before the payments were done by were done using the dollars, but now they are put in the extra account in Kenya shillings, and then within the period of 6 months, the banks, the 5 banks that have been given that role, are able now to look for the dollars without putting a lot of pressure on the central bank on the reserves. So in a way, that actually was working, and that's why I was saying, looking at this strategy, yes, it is a strategy that worked at that time as an emergency matter, but then now it has gone beyond the period that it was supposed to serve, and that's when now we are getting into this problem, because previously when the fuel prices went down, Kenya could not enjoy that, and that is why Uganda had to opt out, and currently it is buying fuel at a much lower price. So looking at it from an accountant point of view, it will be important that some of the issues that even the National Treasury had recommended that we have a multi-agency task force to look at this contract and look at this deal well, that should have been done before. But again, looking at where we are now, I've said that Kenya is not in a position to opt out of this deal unless it is going to pay the penalties around that, which is again going to cost a lot of money. And looking at the current situation where we have the war in Iran and the US, this is not the right time to opt out. So for me, the best thing that would be done would be, if possible, Kenya should actually engage into, we should have a portion of our oil coming from the G2G and another portion coming from the open tender system. Otherwise, we cannot bank that we are just getting our fuel from Gulf area and with what is currently happening. Yeah, so those are some of the policy issues that need to be done. And as I previously said, the Auditor General came up with very good recommendations and some of the gaps that were there. If these things had been checked by now, I believe that we'd be in a much better position as a country. Yeah.
From where you sit, what are the other viable options? Because even as we talk about, again, as you talked about putting our eggs in one basket, should we probably look at Latin America? Should we probably look at the Atlantic countries? Should we look at Nigeria? What are the other viable options from where you sit?
Yeah, the viable options, there are some that can be applied on a short term and others are long term. One of the key things that we need to do, we need to have strategic reserves and a policy around that, so that we are having our own reserves in Kenya. And then another one, we have options on where we can get the fuel. It can come from even West Africa, which is an African country. We've seen quite a number of countries that are actually exploring that route. But this concentration risk of just having countries in the Gulf, maybe by then we had good relationships and we never expected what is happening to happen. So this is something that we need to do. And then another thing, we need to have a proportion of our oil, even if it's 40%, coming from the open tender system, so that we can be able to have the price, the spot price of the fuel. Otherwise, as it is now, the deal is almost locked, and we have to pay for those high prices. And that's now why, looking at the stock levels that are supposed to be held by the oil companies, you find that there's a disparity, and that's why we are saying there's manipulation of data in terms of what are the quantities, in terms of the days that we have. So we also need to have a mechanism that can be able to monitor how much oil can be held by the companies, how much of the fuel can also be held by the country. And looking at the way the country is at the moment, we find that those reserves, the number of days are too short, such that if there's an elongation of this war, then definitely we are going to be in serious problems. And just as it has been discussed, we note that fuel drives the whole economy. It doesn't just need to be fuel. So many other things, the production, so many other things. We are a net importer. Our currency is going to go down. So I mean, the whole economy is going to be